bigger picture, Bart, when you see order flow come across your desk, how does it compare to what is going on in the equity markets? Is there a correlation or an inverse relation? I mean, what have you noticed?
So as far as a correlation, as far as price movements, we haven't seen much correlation at all. And I think people look at very short-term swings.
People want to see it as a sort of a gauge of market sentiment or appetite for risk.
It tends to be driven by different factors, right? I would say that trading cryptocurrencies is way more analogous to other asset classes than you might think from a market maker's perspective, managing risk and understanding kind of the operational sides of it. But as far as kind of the investor demand for it and what drives the Bitcoin and other cryptocurrencies, we have yet to find much of an analogy in the driver of it.
Right. I'm not doing any sort of correlation analysis or anything like that, but when you put the charts on top of each other, they look pretty similar when it comes to the S&P 500 and Bitcoin. But you don't see that yourself.
It's a much different ownership, right? It's not an institutionally driven marketplace. Like the S&P 500 primary,
right,
is the biggest driver there. So I think the inputs to those movements are different. It is a risk on, risk off, but I think the drivers of that aren't earnings or interest rates. It's regulatory, it's technological advancements. It's a whole host of other things that are out there.
You see volume pick up when prices are higher, or does it not matter? Volume stays the same no matter
no,
what?
I think generally when there are severe price movements in many asset classes, you tend to see the first reaction is liquidity tends to kind of dry up as people kind of freeze, right? Should that persist in ongoing, that tends to intensify. So I don't think in that.
What are you seeing here with Bitcoin sort of in this range?
Well, it's been, it's the world, it's a pretty wide range, right? So in the last couple of months, the world has told you that it's worth more than 6,000, right? It gets down to 6,000, people buy it, and then it's worth less than 9,000, and we find ourselves kind of in the middle of that range today, and that's where it's kind of knocking back and forth. And, what is the catalyst that creates that breakout up or down? There's a lot of technicians out there that are probably better suited to opine on that, but that's kind of where we are in that range, and we're right in the middle of it today.
So he brings up a great analogy. The cryptocurrency market and the stock market have been, if you look at the chart, it does look like it's been correlated, but I'm going to disagree, and I actually have videos. If you want to look at my recent videos I posted on Tom Lee, where there's a big difference when it comes to leverage. And the stock market has a lot more leverage than crypto assets. So yes, they're correlated for now, but I've made this prediction before, and I will say it again. I do see an eventual credit crunch, and when the credit crunch does happen, I do not see cryptocurrencies in the stock market acting similar. I see cryptocurrencies acting closer to commodities like oil, precious metal, and if there is a credit crunch and we see the same kind of problems happen in 2008 repeat themselves, I see crypto assets going up while other equities and bonds are more determined by interest rates. So if obviously interest rates continue to go up, I see both of those prices going down. But let me know your thoughts on what you think about this, and I will talk to you guys soon.